If you're a business owner and you're looking for a one-stop shop to everything you need to know to get your business funded, then this is the video for you. Because in this one, I break down my 3-step formula, which I call my Omni growth strategy, which will allow you to get up to 100K plus in business funding following these exact strategies. And you want to make sure you watch this video all the way through, because I don't leave out any details, and every single part of this video will allow you to build your own custom funding strategy. So let's head over to my computer and break everything down. All right, we are at my computer, and here is what I need from everyone that's watching this video today. What you learn will help your business get capital more than you thought was possible, but will you actually buckle down and use it? That's the number one question that you need to ask yourself. And just some quick background info on me, just in case you don't know. Hopefully you are subscribed to the channel and you do know some things about me, but if you don't, I started off as a cash guy. I wasn't always just personal credit, business credit guy, and I quickly realized with starting businesses and getting into entrepreneurship that I needed credit for my business, and I got pointed in the right direction of leveraging personal credit to give business credit. And then from there I went into learn mode after getting just a bit of info on credit for the next 2 to 3 years, and really studied and analyzed every single thing that there was to know about credit, either on the personal side or the business side. And ladies and gentlemen, I don't like to brag on myself too much, but I do want to let you know that I am qualified to be talking about this. I'm not just some random dude on the internet telling you about credit. No, I've been featured in a lot of different publications. I've been on a lot of different podcasts talking about how to ethically hack the banks and showing people this 3-step formula that I'm getting ready to show you guys on this video today. Again, I practice what I preach. I've been approved for a lot of different funding, over at this point 500K in business funding. And you guys see, I wasn't like, I had to grow my credit as well. I didn't always have the best credit. I started off when I first started learning this in the low 600s, and then I eventually got up into the 700s, as you guys see right here. And then I, as today, you know, got up into the 800s where I'm at currently right now. And I've gotten some of the best cards that you can have on the personal side and on the business side. These are some of the business platinum Amexes, and you know, some of these great cards that you guys are going to be able to get your hands on if you follow these strategies. And it's not just me. I'm not some unicorn. People that are in my mentorship group that follow these strategies and wanted to work closely with me to get it implemented got these results. Okay, this is my man Amari. He got $70,000, which was from 2 lines of credit and a business credit card, which was for $20,000 as well. And then this is my man Jason, who was also in my mentorship group, and he got $60K in business credit to get his t-shirt business off the ground. So ladies and gentlemen, it's not just me. It does work across the board. I could bombard you with testimonies, but I just want to show you guys that this stuff works. It's not just me. It does work for other people if you can follow these strategies. All right, so let's go ahead and get into it. Who does this work for? This can work for any existing business owner, and this can also work for any startups. You could be in the trucking industry, consulting, e-commerce, real estate, Turo, day trading, service-based businesses, sole props. Literally, ladies and gentlemen, all businesses, this strategy can work for you. And I want to kind of break down some things about debt. All right, you hear a lot of times that debt is bad, or you know, the Dave Ramsey's of the world and all that stuff. Not to knock Dave Ramsey, because he's definitely right about a lot of stuff, but I want to kind of break down good debt versus bad debt. Now, what you're looking at right now is bad debt. Okay, going on trips every month. All right, buying cars above your means, spending all extra funds that you have on items to keep up with the Joneses, so to speak, or look rich. I guarantee you, a lot of people that are watching this video either are that person or know people like that. Let me know in the comment section right now if you know people like this, or you yourself are like this and you know you need to switch up and change. And these are examples of good debt: investing in business / personal development, investing in marketing to grow and scale your business, purchasing inventory for a busy season. Like, all of these things that are actually going to get you a return on investment, actually make you money. That's what you need to be spending your money on, or using credit to get access to things that are going to generate you cash flow. And I want to break down some of these old ways that I'm sure a lot of people have either tried or are currently doing right now. Okay, pulling from your 401k, asking friends and family to try to help you get funding, using your own personal credit cards. This is a big one that I know a lot of people do, and it's actually really, really bad. Okay. Working a 9 to 5 and saving a bit each check, getting denied over and over and not really understanding why. I know a lot of people that they can have a 750, 780 credit score and still get denied for funding, and they don't understand why they're getting denied. But don't worry, we're going to break down all of that stuff in this training here today. So here it is, our 3 phases to business funding. All right. The first phase is presentable, knowing what banks want to see from you to get approvals. The second phase is assemble, how to assemble any credit report to access massive amounts of funding. And then the third phase is fund, the best ways to fund your business and which banks to actually do it. So let's go ahead and break down the first phase, which is being presentable. Knowing what your credit score is, okay? And ladies and gentlemen, I'm not talking about Credit Karma. A lot of times people use Credit Karma to, check their credit scores, and your Credit Karma score can be off anywhere from 30 or 40 points, either up or down, okay? And that's because Credit Karma uses what's called a Vantage score, all right? And a Vantage score is a scoring model that really no lender uses to underwrite funding for people. Okay. So that's why a lot of times Credit Karma is just really inaccurate as far as the score is concerned. Now you can use Credit Karma to actually look at your credit report and know what's on there, like inquiries, late payments, charge-offs, keeping up with all that stuff. But as far as your score, you definitely don't want to use Credit Karma for that. The second part of this is having a complete makeover of who the banks want to throw money at. All right. For my ladies, when you go out, you make sure your hair is done. You got your nails on, your eyelashes on, all that stuff like that. For my fellas, you make sure you're smelling good, fresh cut, beer lined up. It's the same exact thing. You want to make sure you're looking good for the banks. And then lastly, knowing what each bank wants to see from you to get an approval, which we call data points. So what we're looking at right now is, in my opinion, the keys to the kingdom. This is exactly what you need to do to optimize your credit profile to be ready to go for funding. And so the first thing is 10% or less utilization. This is very, very important. And really right now with underwriting being so tight, you really want to have it under 5% to be honest with you, but 10% is like the bare minimum. Also, no late payments reporting. Okay. I would rather you have no late payments at all. However, if they're past 2 years old, a lot of banks still will be able to get you some approvals. But if you can have no late payments, that's even better. Having no collections, having no charge-offs, no negative items at all. Literally just having a clean credit report. Having 3 to 4 years of credit history is also good as well. Now, are there some banks that will give you funding and get you going with just a year of credit history? Yes, but your options will be limited until you build up that credit history. All right. Having 3 or less hard inquiries on each bureau. This is very, very important. And you want to make sure you stay tuned to the end of the video, because if you have a lot of inquiries, I'm going to show you how you can actually get those removed in this video as well. And also, lastly, no new accounts within the last 3 to 6 months. Now, what this does is when you have a lot of new accounts in the last couple of months, especially when you're trying to apply for funding, the banks think you're thirsty. Okay, they think you need credit for something. And what banks like to do is they love to give funding to people that look like they don't need it. And the way that you look like you need it is by having high utilization, having applied for a lot of accounts recently, which, will be your hard inquiries, and also the new accounts that are showing up on the credit report. All right. So these are all things that you want to notate and make sure you have under control. And a lot of people ask me, if you don't have some of these things that I just showed you on that last slide, will this take long? No, it really won't. If you're serious about change, you can get this done in 30 to 90 days, depending on what you have on your credit report. Now, if you got a lot of negatives, yes, it could take maybe 6 months, 8 months. But again, this is something that you need to do anyway. Having good credit will take you so far. So just getting this stuff cleaned up and getting yourself in position is worth the time invested. Trust and believe me on that. And again, stay tuned, because if you really want to figure out how to get stuff off your credit, we're gonna dive into that as well. I have this up here, and a lot of people might know what this is, but some people, you might have seen it, but you don't really understand how this applies to business funding. Okay, so we're looking at the FICO scoring chart. All right, and this is really how you break down how the banks look at you. Okay, so obviously the highest thing here of the pie is the 35%, which is payment history. All right, and so why this is so important is because this determines to the banks that they can trust you with giving you funding, and you'll be able to pay it back. Okay, so think about it as if you borrowed some money from one of your friends, your homegirl, your homeboy, whatever it is, and they didn't pay you back yet, right? You lend them $2,000 and they haven't paid you back yet. And all your other friends know this, okay? And so now say that same person that owes you money goes to one of your other friends and asks to borrow $3,000 from him. But that person knows he still owes you money. You think that person is going to want to give them money knowing that they haven't paid you back? No, right? And it's the same concept with the banks. If you have high utilization, that means you owe money to the banks. Why would they want to give you more money? It's the same concept. Same thing with collections and charge-offs and all stuff like that. That means you defaulted on a commitment to another lender. Why would another bank want to give you a chance again? It's the same thing. So that's why having a clean credit report is so important. And as you see, it's the highest part of the pie, which is 35%. That's why having just collections removed can jump your score so high, because this is the most important part. And so the next biggest part of the pie, which is 30%, is amounts owed. And that's what we were just talking about, utilization. Okay, having that very low can increase your credit score a lot. I've seen people that are like a 620 credit score but have like a 50% utilization, drop their utilization to 5%, and their score go up 100 points. Right. And so like that's really, really important. And that's a big part of the score as well. Next part is length of credit history. This is like your age of credit. Now, this isn't as important, but it is important because, again, this shows your consistency of being able to pay on time and have good history, have good habits. That's what also increases your score as well, and also makes you more favorable in the eyes of lender. And then we'll go over the last two 10% categories, which is credit mix. You got your different types of credit. That can be installment loans, which will be personal loans, auto loans, student loans, stuff like that. And then revolving credit, which is credit cards, and even sometimes lines of credit can show up as a revolving credit too. And then, you'll have your other types of like mortgage loans, stuff like that. So that's credit mix. And then new credit is like inquiries, and new accounts. So that'll be anything new that you apply for and got approved, and that shows up on your credit. So I know I told you guys earlier in the video that I didn't recommend that you use Credit Karma to check your score, but these two things that you see on the screen right now is what I do recommend. The first one is Identity IQ, and the second one is Experian. And why these two are so good, because they give you your actual real FICO scores, okay? And that's what you really want to look at, so that you can kind of see what the banks are seeing. That's what you want to look at, what they're looking at, so you can kind of line that up and make sure everything is looking the par before you even apply for anything. So both of these are paid. Now, Experian, they do have a free account that you'll get your Experian credit report updated once a month. So at the bare minimum, I recommend you do go ahead and set up a free account with Experian right now, or at the end of this video, obviously, and get that account if you don't have it up, so you can at least know what your FICO score is from Experian every month. Identity IQ, you can get all three. I think it's they have a bunch of different plans. I think it's like $30 a month. Same thing with Experian, you can get all three for $30 a month as well. And I do recommend that if you're getting ready to go into what we call a funding sequence and you're about to start applying for funding, I do definitely recommend you have that, because it's good to have those updates, especially with Experian, because you will get daily updates. And if you're like dropping utilization and you're waiting for stuff to report, it really is timely to have that information so you can time it right to go ahead and apply at the right time. So I do definitely recommend these two for checking your current FICO scores. And before we go on to the next section, if you are enjoying this video so far, go ahead and obliterate that like button for me. Go ahead and subscribe to the channel as well. Hit that bell for notifications so you will be notified every time I drop a new video. And let me know in the comments right now, put enjoying this if you really are enjoying this training and you're learning and you're really trying to understand and get this thing put together. Put enjoying this in the comments right now. So this next section is the assemble section, how to assemble. So know what utilization is and how to calculate it. We kind of just went over that, but we're going to dive a little bit deeper. turnover, having very few inquiries and new accounts, and lastly, finding out what banks pull from what bureaus. I can't express how important that is when you're trying to like really maximize funding and kind of build a good funding sequence. So here's a key fact: your credit report is more important than your score. And I'm gonna repeat that one more time for the people in the back that didn't hear me. Your credit report is more important than your score. I see so many times that people will have a 750, 730, 780, 790 even, like these great scores, and get denied over and over and over because their credit report is not optimized. I can't stress enough that having an optimized credit report is better than having a supremely inflated score. Okay. I've seen people with like a 690 or a 700 that had a really good optimized score get approvals over people that had a 790. So I'm telling you guys, it's more about the report, not the score. And another key fact, it will be tough to get approvals for business credit if you have a thin profile. Now, what a thin profile is, meaning you just don't have a lot of different accounts. Okay, that's really all that means. Now, is there banks that will get you approvals with like a year or close to it? Yes, but your options are going to be few and far between until you can kind of get some more history. Okay, so I know we were talking about utilization earlier, so I really want to kind of show you guys how to understand utilization and how to calculate it. Okay, because a lot of times people mix it up. So on this chart that we see here, you see we have 3 different cards and they all have 3 different balances. So as we see here with card number 1, we have a balance of $150 and a max limit of $750. So the utilization on that card is 20%. Now for card 2, it's a balance of $396, but we have a max limit of $1,200, and the utilization on this particular card is 33%. And then for the card 3, we have a balance of $300 and a max limit of $3,000, which gives us a utilization on this card of 10%. Now, where people get mixed up is they think that when I say under 10%, that means all of these cards needs to be under 10%. That's not how the utilization works. Utilization is calculated between all your cards. So how they do it is with FICO, they add up all of your credit limits, like total, all of them together, which as you see at the bottom, that's what's being done. So for this particular scenario, this person has a total credit limit of $4,950. Okay. And they have a total balance owed between all cards of $846. Okay. So that means overall, their utilization is at 17%. Okay. So how you can attack this and really kind of drop it down, you want to look at, okay, what are your balances? So you see 300, 396, and 150. So theoretically, the quickest way would be to drop down the 396 because that's the highest one of the 3. So you would want to attack that first and pay that one off. So that's kind of how you understand utilization. I know sometimes people get confused with it and think it's per card, but it's totaled up. And this breakdown right here again is a great way to do it. So if you need to kind of scrub back and rewatch this part again, definitely do it. But that's how utilization works. So right here is the difference between a soft inquiry and a hard inquiry. And you want to notice because there are different types of business funding options that will be a soft inquiry or a hard inquiry. So you want to know the difference. So with a soft inquiry, we'll do that one first. They can occur without your permission. It does not have any effect on your credit. And then it occurs when you have a background check. When using stuff like Credit Karma, that's actually how they're able to figure out your credit score and your credit profile and stuff like that, because they do a soft pull every day. And then also to those pre-approvals that you get in the mail and emails and stuff like that. That's how they do that. They do a soft pull on your credit and send you those mailers. Now, for a hard increase, lenders must have your permission before running your credit. It does have an impact and will lower your score. And this occurs when you're applying for a credit card, or auto loan, mortgage, or other loan. So what we're looking at right here is a free resource that you can use to better understand what the banks are going to pull when you go to apply for funding. Now, I can't stress enough how important this is. You don't want to kind of be going into the bank applying blind. You want to know exactly what they're going to pull so that you know that that particular bureau is ready to go. This is so important because this is how you technically can ethically hack the banks, because you know what they're going to do before they even do it. Okay, and this is how you can kind of beat them at their own game. So this right here is Doctor of Credit. It's a great resource. I used to use this a lot when I first got started and started getting my first kind of sets of approvals. I used Doctor of Credit to kind of understand where to go to, kind of learn what they were going to pull. Right here is an example. I believe this is a Bank of America. Yeah, I think this is Bank of America that we're looking at for the data points here. So as we see, this is different from state to state. Okay, so it's not the same in every state. Now, some banks are, but a lot of them are not. So as we see here, like Alabama, we see that they're going to pull Experian. If you're in Alaska, they're going to pull Experian. But if you're in Arizona, it's very likely that you get double pulled and they pull TransUnion and Equifax. Okay. Arkansas is Experian as well. And so it's like, as you see, like all these states are very different. And so that's why you really want to have a resource like this to go ahead and see what they're going to pull, so you can kind of prep that credit report to make sure it's up to par and ready to go, so that when you do apply, everything is looking up to par. Everything that we've been going over, if you follow this stuff, I'm telling you, it really works. What you're looking at right here is some of the people that are in my mentorship group that actually get our guidance and kind of more help on this. But you see right here, 817, 7% utilization. These scores, 738, 746, 740, 735, 7% utilization. Like all this stuff, these people didn't necessarily have it at the beginning, or they maybe they had a good credit score, but maybe their utilization was high, or there was a couple pieces of the puzzle that they were missing. And then once they really got understanding of this stuff and they implemented it, this is what happened. All these people were ready to go for funding now, obviously, and they got massive amounts of funding. I just want to show you guys that this stuff can really turn your credit report around just by implementing some of this little stuff that you may not know. And you probably maybe already have a good credit score, but just implementing some of this stuff can drastically increase it even more and increase your approval odds as well. So now we're on to the fun part, which is the fun part. Okay, so what types of business funding are best is what we're going to go over here. How to get these types of funding from the banks, and then also I'm going to give you guys some banks that you can go to right now to get funding if you're already kind of meeting the criteria and ready to go. So our funding strategies that we teach includes getting access to 0% interest business credit cards, lines of credit, SBA loans, and term loans. And if you don't know what a term loans is, it's just a finance term for business loans. That's all that really is. So right here is another key to the kingdom, I like to call. This is very important. A lot of times people don't have this stuff together when they're trying to apply for business funding. So the first thing we're looking at right here is the business structure. This is so important. Okay, having a risk-free entity name. I'll name a couple of high-risk industries. Real estate is a high-risk industry. Trucking is a high-risk industry. Obviously, anything in the cannabis, adult entertainment, stuff like that. All those are high risk industries. Banks don't like to give those type of industries or type of businesses funding. So how you beat that is you don't have it in your name. So especially for real estate, we have a lot of people that we help with real estate, and what we always tell them, if they have any type of like real estate in their name or something that just relates to real estate, we tell them like it's best to kind of change it to something else. Management is safe. Stuff like that. It's just, you really want to just have like a generic business name, so it's not really clear on exactly what it is that you do. The next thing you want to have is a risk-free NAICS code. So what this is a specific code that the banks use that they can see what industry that you're in. Okay, and you can select this code typically when you're setting up your C Corp, S Corp, or LLC, whatever type of entity you have, even a sole proprietorship. You'll be able to select this code. So you want to make sure and have this in mind when you're doing this, that, hey, if you're in a high risk industry, you may want to have a more safe NAICS code, maybe like something like consulting or, just like a safe something code that is not really tied to that industry if you know you're in one of those high risk industries that I just mentioned. Obviously, you want to have a EIN number, okay? You want to have a real business phone number, not like your cell phone number or your just personal phone number. Like, you want to have like a real business phone number. It could be a 1-800 number that you can get, or, you know, just something that you get from a carrier, but definitely want to have like a real business phone number. Also, this one is really, really important. Having a business email, okay? The business email is not leadtrucking@gmail.com. That's not a real business email. Your real business email will be, you know, john@johnconsultingservices.com. That's tied to a domain that you've purchased. That's a real business email, okay? And like one of the best ones we like to use and we recommend a lot is G Suite, or I think they call it Google Workspace now. So that's kind of the best one to get. You can purchase a domain from like GoDaddy and then link it into Google Workspace, and then boom, you have a business email, and it's very cheap. It's like $6 a month, and you'll have all of that set up. Also, a business address. You want to have this. Definitely don't have PO boxes. A lot of times people will have a PO box, and banks definitely don't like those. Now, I would say pre-COVID, they didn't like home addresses to be listed as your business address. However, now they do know a lot of people have, you know, like home businesses and home offices and stuff like that. They work from home. Now they don't really kind of, it's not a thing to have a home address as your business address. However, if you still can have a business address and like get like a virtual address, that still is recommended. However, you won't necessarily be denied for funding just because you have a home address as your business address. But absolutely no PO boxes, though. They really don't like those. Also, having a business website. This is very, very important as well. When you go to apply for funding, sometimes, especially when you're going in the branch, they want to see stuff like this. Okay, they want to see that you have a real legit business and you're not just some random thing you just set up so you can try to, you know, get some funding and run off. Okay, they want to see that you got like a real legitimate business. Now, when I say a website, that doesn't mean you need to spend $5,000, $10,000 on somebody to build you this some fancy website. No, you just need to have something really simple. If you need to go to like, you know, all these sites like Wix and stuff like that, and get you just a simple website built. Like, it doesn't have to be something like extravagant, just something with the domain tied to it. So if you can go to www.johnconsultingservices.com, and just a site pulls up with just some basic information about how to, you know, get services from you. That's really all you need. That's all the banks are looking for. They just want to be able to go quickly type in your URL and go to your website and see that you're like legitimate. Okay, that's really all they're looking for. And obviously, lastly, business bank accounts is very key as well. That I can't stress that enough. Most times, a lot of banks, you can't even get funding without having this. So it's going to be kind of tied in anyway. And this list right here is actually some funding options that you can use right now. If you're ready to go and actually meet the criteria that we just went over, you can go to some of these banks and get funding. And a lot of these banks I've done videos on my channel. So you can actually go to my channel and go through our business funding playlist and actually find a lot of trainings on these particular cards. But you know, US Bank, you know, $60K no docs you can get. Wells Fargo, $50K no docs you can get. Definitely have a video on Wells Fargo. Chase Ink credit cards, $10 to $25K per card. We have videos on those on the channel. FNBO, which is First National Bank of Omaha. Okay, now this is a regional bank, so they're only based in Kansas, Nebraska, Colorado, and Illinois. But you can definitely get funding from them. Okay, $10K to $20K per card. You have local credit unions as well that you can use to get funding. The GM Business Credit Card is a soft pull. Okay, we just did a video on them. If you want to watch that training, you can watch that as well after you finish this one. And then BMO Harris is a bank that has a $50K funding program for Blacks and Latinos, okay, specifically. So we definitely have a training on them too. So like, again, a lot of these banks, if you want to like get more details on the process of what you need to get funding from them, we have trainings on the channel that you can watch. But these are lists of banks, guys, that you can go to right now. Literally, these banks right here is, if you play your cards right, you can get well over $250,000 from these banks. right? Just alone. Like most people will be good just using these banks right here. And there's 100 more that we know of in our database. So it's crazy the amount of funding that you can get if you, again, know how to play the game. That's really all this is. If you learn how to play this game, and sometimes it is hard. Okay, most business owners that didn't get into business to be a credit expert, so it's understandable. But if you're kind of doing it on your own, then this is kind of what you have to do to kind of understand this stuff. And now, using all the information that we've went over, okay, you can create what we like to call Omni funding rounds. All right. This allows you to strategically build funding strategies using all the information to know exactly which banks to go to and what they want to see from you to get approvals. And you realistically can line up 5 to 7 banks in one round and get $50K to $200K in funding with 1 to 2 inquiries per bureau. Like it's crazy. Okay. And I know even you watching this, you might sound like it's too good to be true, but really you can do this, guys. Again, people in our mentorship program have done this ad nauseum at this point. So it's not only me, it's multiple people have done this. Some people have just really watched thoroughly all of my YouTube videos and done it as well. So it definitely can be done. And here's the key thing I don't see people talk about a lot is building relationships with bankers. All right. Although some banks are online, most banks you need to set up a business bank account to get access to the funding. And building these relationships with the bankers allows them to push through your applications in person to get higher limits than what you would have just applying online. I'm telling you guys, this really does work. You going in and kind of meeting people, meeting the bankers, seeing them, and them seeing you, understanding you in the business, stuff like that. It really will help you in the long run. Okay. So, and again, most of these regional bank plays that we tell you about and some of these big bank plays as well, like you have to go in anyway. So you're going to have to build these relationships with the bankers. And again, it does go to help you out in the long run because they can push some of these applications through and actually give you some of these tips for underwriting that you wouldn't have known if, again, you just apply it online and you're just going through the algorithm. So it is something that is important and it does help. And I know I mentioned this earlier in the training, but getting your inquiries removed in 24 hours is definitely possible. Okay, so you will get some hard inquiries on your personal credit for these approvals. That's the only thing. I don't show any type of funding play that will show up on your personal credit. Okay, I don't believe in that. It's supposed to be business funding. It shouldn't be showing up on your personal credit. I'm talking about the account. Okay, there's really kind of no way to avoid having an inquiry unless it's a soft pool funding play. But outside of that, again, it's going to be an inquiry. But since these are business accounts, like I was just saying, they won't show up on your personal credit. So we can remove any non-account holding inquiries. This is the law. Okay, you can remove any non-account holding inquiry. Here's the question that I have for you as we kind of get ready to wrap this up. Are you ready to get funding? Okay, these are 2+ years of mistakes and lessons that I've shared with you in this video. Okay, like I've went through all the mistakes and the denials and and trying to figure this out and getting too many inquiries, like all this. I've went through all this stuff so that you guys don't have to. This is the shortcut, the cheat code. Okay, now it's up to you to take action on something. Okay, I know so many people that they watch. It's just analysis paralysis, as one of the people I know say. Analysis paralysis. They just watch so much stuff and they never take action on anything. You have to start taking action, whether it's fixing your credit, whether it's like going in and like really sitting down and understanding this stuff. If you're going to do it on your own and like taking action and like really figuring this out and apply for something. And then also too, if you just know you're scared, you don't want to mess up, getting help, you know what I'm saying? Go ahead and investing in your business and fast tracking the process. Like either one of these options will help. So you have 2 choices right now. You can take the info that you learned today and try to put it all together yourself. Now, I did this when I was starting and, I didn't have a choice at that time, but if I could do it differently, I probably would go another route. Okay. I'll just be honest, because it took a long time, a very, very long time. Or you can learn from someone who has gotten 500K in business credit and get guidance through your journey to get your business funded. Now, for the people that, they just want to do it on their own, totally fine. You can go ahead and exit the video. This next part is probably not for you, but this is for business owners that know time is money. Okay. And want to invest in guaranteed results. All right. Book a call to fast track this process. Maybe you've been trying to do it on your own, it hasn't been working. Maybe you're just nervous, you got good credit, and you don't want to mess it up, right? And you want to do this right the first time. All right, it could be any of those scenarios. Maybe you're just, you're an existing business owner and you're really rolling, but you just don't have time to like sift through all this stuff and figure out what banks really align with your business. All those type of people meet the criteria, okay? And if that's you, again, and you're ready to get guarantee results and invest in that, go ahead, click the link in the description. You'll see it. You'll be able to click that link. You'll fill out the questionnaire, and then you'll be able to select the time to book a call with us. And on that call, we'll kind of walk you through our mentorship program and also kind of see where you're at, see if it makes sense and if we can really get you results quickly, because our mentorship program is for people. We want to get results as fast as we possibly can, okay? We've had people come in and they get funding in 24 hours, okay? We've had people get funding in 48 hours. We've had people get funding in a week. We say 30 days to just, give time to sometimes, for certain people, they might need to drop utilization, stuff like that. But it really can be fast if you come in and you're ready to go, because obviously we've been doing this a long time, so we can immediately pinpoint what the bottleneck is in your process and fix it right away, or show you how to fix it. And again, align you with the banks that can meet the criteria and get you funding, okay? Every bank is different. One bank might like your profile better than another bank, okay? So you have to understand that. And again, if you are willing and ready to kind of invest in a fast track solution and get funding just right away and not play around with it, this option is for you. You can book a call in the description and go ahead and set a time to speak with us, so we can kind of walk through the process and see if it's a good fit for you to join our mentorship program and get these results. All right, go ahead and smash that like button, subscribe to the channel, hit that bell for notifications if you want to be notified every time I drop another video. And let me know in the comments if you have any questions on this, anything we went over in this training, or if just want to let me know that it was good or it was bad, whatever. Let me know in the comments what your thoughts are. If you have any questions, I will respond to most of the comments. I try to do that. And and also too, if you want to get some more info, right? Maybe you ready to kind of run a play or two, go ahead and click the video that you see on the screen right now. This is a video we just did where we show you 3 different business credit cards that you can apply for right now if you're actually ready to go and meet the criteria. And they're all 0% interest with no annual fees, and they're really good cards that you can get a good amount of funding for. So if you're kind of ready to watch that now, go ahead and click that video, and we'll see you in that one.